Joining us more is Peter McGuire from XM. Peter, great to catch up with you on this Monday morning. Well, let's look back first at where we finished on Friday. Of course, we did see those risk assets move higher, a rally on Wall Street, yields lower off the back of that jobs data.
Absolutely, Andrew. 150,000 and good morning. Happy Monday. 150,000 for October, well under September at 297,000. That was revised. So it's the storyline. S&P 500 boom to the upside, 6% nearly. Massive week as far as equities. So that was a very strong reaction overall and a great week to be long. Second part, of course, is where the Fed played. And as you mentioned, yields have certainly come down a little bit over the last number of trading sessions, certainly the 2-year. And the overall US dollar coming under a little bit of force to the downside. Currencies have bounced to the upside, and that's very evident even looking at ours at 65 cents.
How do you see markets positioning themselves at the moment as we head towards the end of the year, Pete, given those jobs numbers, that weakness emerging? We're seeing that also in the services sector in the States too, with expectations perhaps that that's it, the Fed is done.
Well, it could well be, Andrew. I mean, I've got to see how they run as far as inflation leading up to Christmas. I want to see retail sales naturally, and the run up to Christmas, as you mentioned, and the big sale at the end of the year. I think that's Black Friday, isn't it, in the States? So you want to just check to see consumption behaviours, what goes on with inflation, where are we as far as GDP, and any turnaround as far as a big sell-off in equities if that was to materialise. It's very, very volatile, and I just seem to have to wait and see how it all plays out. But I wouldn't be surprised to see further pressure to the downside for US dollar and how that plays into a number of other asset classes.
All right. Well, Pete, before we get to the big event tomorrow locally, let's just stay overseas for now. China, we do have some inflation data coming to us this week. What are we likely to see there, do you think?
Well, you've got to appreciate from an inflation standpoint, the debt issuance of $1 trillion yuan or $137 billion. That's been underwhelming as far as, I think, a stimulus measure. So really, it hasn't been the bazooka that they wanted, or the creation of more, dynamic move to the upside for their economy. Where we run as far as inflation, well, the chart tells the story. And you're looking at those producer prices and consumer prices, it's been very, very flatlining. And the producer prices yearly rate, well, that's bouncing a little bit. You might get back to, a negative 0.2 there. So they've got their own issues, as we know, with property and so on. So, China, we play very, very reliant on them, and certainly does New Zealand for our exports.
All right. Elsewhere, we get a read on how the UK economy is travelling this week. I think you're expecting gloomy. It's not going to look great.
No, it's not. Unfortunately, Andrew, it's fairly gloomy over there. And, as far as retail sales and the overall health of the economy, your services, and that graph, again, tells the storyline, your GDP growth, where we are as far as, a stagflationary environment. And naturally, what we're doing is, do those UK services, do they start to even go further down and further into, really tough territory? So you need consumption, and it's really having a fairly hard battle at the moment to stay positive. The pound's bounced a little bit, but I'm not expecting any greatness from the UK anytime soon.
So, Pete, when you weigh all that up, you've talked about what's going on in the UK. We're also seeing that weakness in Eurozone, of course, too. Perhaps signs of weakness in the States. What's going on in China? Overall, how do you measure the state of the global economy at the moment?
Well, you can't say it's rosy, Andrew, and this is the issue that, companies are going to face as far as consumption and how they build into 24, from auto sales to, all forms of the economy. So you got to say, what impact does that have naturally to asset prices and to naturally the equity markets? And I think that this lead up to Christmas is really going to show us all how 24 plays out, certainly into the first quarter. You've got an election 12 months away for the US. yeah, there's a lot of uncertainty out there, and naturally with wars and other issues, I think it could be a very tricky year leading into 24.
All right, let's refocus then, Pete, locally. What we're seeing in Australia, of course, the big event comes tomorrow. Well, there are two, aren't
Yes,
there?
yeah,
You've got the race itself
the race, Andrew.
and the RBA. Which one's easier to bet on at this point?
I think RBA, they're saying it's 50-50. I'm erring to the side that they will see a rate rise. The IMF came out and recently warned the RBA to raise rates further if we, to cool the economy. It's very, very hot as far as rental and property prices. We're nearly at record territory as far as property in October, according to Core Logic. So these are all factors that drive inflation, higher energy prices, oil, it's, again, you want probably $60 a barrel, not $80 to $90 a barrel. And all of these inputs, how that affects inflation moving forward, and how the RBA interpret the data, and whether the next rate rise is going to be the last, or are there going to be a number of more. We've just got to wait it out, Andrew. Aussie dollar running at about 65.1.
Yeah, and of course, then we've got this where those yields are travelling to at the moment.
Yeah, exactly. I mean, that's that graph really shows it. It certainly came off a little bit, in the last couple of sessions. But I think the overall momentum, you can't. I mean, you look at the chart and what we've experienced in the last 6 months from there around about the 3.4 all the way to nearly 5, and now it's back at about 4.8. So is it going to travel further up? That's taking a little bit of, I think, the guesswork out of the RBA, because the bond rates are helping them to, adjust as far as, lending and all of that sort of stuff.
So, Pete, if the RBA does pull the trigger again and lift rates, how's that likely to play out on markets, do you think? Certainly as far as equity is concerned, given we've seen the local market struggle, but also the Aussie dollar.
Well, I'll answer Aussie dollar first. I mean, I would be, I won't be surprised to probably take a 66 handle out, Andrew, if that, you're running at about 65.13, 65.15 right now. So if there was a rate rise, then possibly, a 66 handle. The US dollar also is coming under a bit of pressure, so that's probably going to play well for the Aussie. As far as equities, maybe put a bit of a handbrake on it. We've just got to see again. Last week was a nice week, a good turnaround, and maybe we're going to build on that positiveness that came out of the States last week. So that might flow over to us, a rising tide lifts all boats sort of thing.
All right, you mentioned oil there, Pete. Look, perhaps the market reassessing what's going on in the Middle East at the moment. We did see oil come off quite significantly last week.
Absolutely. The war premium seems to have, I'm not saying dissipated, but it's evaporated a bit, Andrew. Some of that hot steam's come out of it. It's very, very volatile. If you look at it over a chart over the last 2 months, where it bounced to 90, then it came back, and then it bounced again and came back. Is it going to be 3 times lucky? It's, again, incredibly volatile, great for trading. Of course, short-term traders are all over it. They just love it. And we've just got to see what the momentum is, and if geopolitical drives it further, or is there a little bit of a downdraft leading into that Christmas period. It's a little bit of uncertainty across the energy complex at the moment, but it's never short of surprises. So yeah, strap yourself in.
All right, and given we saw the US dollar and those US Treasury yields ease, that was broadly supportive of gold. Just trying to kiss $2,000.
Yeah.
You remain bullish there, Pete?
Absolutely, Andrew. That's a lovely definition, kissing it, because it's right on it. It's just under, and I won't be surprised to see it move again to the upside this week. Again, for I think overall momentum. It's choppy, but it seems to be edging higher. And yeah, lead up to Christmas, I won't be surprised to maybe put another 50 or 80 bucks on it from here. We've just got to see how it plays out. But yeah, it's certainly a great commodity to look at, trade, hold it in, from a portfolio perspective, and then trade it with paper. So it's it's got a lot of attraction, gold market at the moment.